My colleague is speaking currently to Shri Ravi Agarwal, Chairman CBDT, and Sanjay Kumar Agarwal, Chairman at CBIC. Let's cut across to them and listen.
Something that needs to be plugged. So that has also been done. That exercise has been done, and what we see as a result, that the bill that we propose to present before the Parliament next week, that it has substantially come down. I would leave it to the Honourable FM to announce later at the time of introduction of the bill, but she did mention and hint that it is approximately half of what it is at present. And that's a huge exercise that has been done, and we are sure that when it will come and it will be presented, people would welcome it.
Clearly. So just a clarity needed that whether it will be a replacement of the 1961 Act or there will be amendment in a form of new bill?
So it will be a completely new bill.
Okay.
And of course there would be period of, overlap, because when this bill gets implemented, whatever is the date of effectiveness or the year of effectiveness of the bill, post that bill would, the provisions of that bill would, that act, whenever it comes, would be applicable. But in those years, some provisions of this act would also, be applicable. So those repealing and saving sections have been also put, and that is normal process. Whenever this change happens, that's a normal process. So that's the same thing would be followed.
Clearly. Mr. Agrawal, in fact, in line with indirect taxes also, even the custom duty review was announced in the July budget. Now we have seen that it's completely been rationalized. Now the tariff is, come down to 7 from earlier 12 to 13 tariff. Could you please throw some light on that, how this is going to help businesses and overall, sector?
Thank you, Shri. And I would like to explain that there were 4 objectives when we carried out this exercise. One was to ensure economic competitiveness of Indian industry. The second was that tax structure is simplified. And third was that to provide the protection to specific sectors for a short duration and then ease of doing business. So with that objectives in mind, this exercise has been conducted, and to simplify the rate structure, now 7 rates have been removed, and including 0% rate, now there are only 8 rates.
8 rates.
So the rates which have been removed are 25%, 30%, 35%, 40%, then 100%, 125%, 150%. The remaining rates are only 0%, 2.5%, 5%, 7.5%, 10%, 15%, 20%, and 70%. So 8 are remaining, including 0%.
Okay.
So after this exercise has been done, the average rate has come down from 11.65% to 10.66%, which is very near to the ASEAN country rates, average rate. So in conducting this exercise, what we have ensured that the graded tax structure is applied on distinct value addition in the chain. So raw materials have been kept either at 0 or 2.5%, and after certain processing of inputs, those have been the products which are emerging and intermediates have been kept at 5 and 7.5%. Capital goods have been kept at 7.5%, and the finished goods largely at 10%. 15 and 20% rates have been retained because many of the items which are covered under PLI and PMP schemes are in these rates. And at the rates, and wherever the rates have been eliminated on those items, we have brought them down to 20% or to 70%, but to ensure the effective rate remains same. AIDC, which is a cess, has been imposed. In certain cases, the AIDC which has been imposed is lesser than the rate reduction in BCD rates. So the incidence has also come down in certain cases. In addition to that, for ease of doing business, the items which were attracting cess as well as surcharge, there the surcharge has been exempted. There are 82 such tariff lines. Thirdly, in this exercise, what we have done is we have tariffized the effective rate into the tariff, and there are 51 tariff lines where this exercise has been done.
So one line also very interesting because the measure is seen as a combating US tariff policy. There is an import duty cut on the motorbike. Could we see it as a kind of measure to combat this whole threat around the US tariff?
On motorbikes, earlier the rate were 50%. And if it is in CKD condition, there was a lower rate of 15%. Then in SKD condition, the rate was slightly higher.
Yeah.
If it is coming in CBU, so the rate was 50% with the SWSS working out to be 55%. Now, in this exercise of bringing down the rates has been brought down to 40%. So basically, the idea is to rationalize the rates.
Okay, but the thought process behind it is definitely in mind that there is a tariff policy from the US going on. Is that the case in the thought process, sir, somewhere?
That could be, but when we did this exercise, what was in our mind was to do the rate rationalization, and wherever the rate can be brought down. So we brought down the rates.
So, Mr. Agarwal, to you, of course, one of the biggest announcement is with respect to a new income tax regime, and now the income up to 12 lakh is there is no tax. To summarize that, could you please explain the bit of it that how this is going to benefit taxpayers, and how many taxpayers could be benefited out of it from 7 lakh to 12 lakh, if you could?
At present, if we see for assessment year 24-25, till now some around 8.75 crore returns have been filed, and I would say all the taxpayers, they would get benefited, they get impacted, because this slabs is cutting across all the income groups. So that way even people who are below 12 lakhs, they would get full rebate and they would not have to pay any taxes. But even beyond that, even people with higher income, they would also get benefit. For example, above 24 lakhs also, they would get a benefit of 1,10,000 in each case. 12 lakhs and below, it will be zero. As was also mentioned, we have in fact come out with the FAQ wherein the table is there, which reflects what is the benefit that is available to different tax slabs. Yes, from 7 lakh to 12 lakh, if we see, about 1 crore of taxpayer is involved, and they would get benefited. So therefore, 1 crore taxpayer as on date, based on the income that they are reflecting as on date, they would not have to pay any tax.
And how many taxpayers you think will shift to now new tax regime after this changes, sir?
Well, I think
already 72% already shifted.
74% are there who have shifted to the new tax regime, and I don't see any reason practically as to why they should remain in the old tax regime.
Are you somewhere indicating that there will be a phase out of the old regime?
Well, it is the choice of the taxpayer. But then, yes, we would like most of the taxpayers to come to the new regime, because that is what is we feel that we should move on from this era of deductions and exemptions and provide a clear, simple tax regime. The clear, simple tax regime should not be amenable to more interpretations.
True.
Right? It should be a straight calculation for the purpose of determining the tax liability. And therefore, that is the philosophy behind this new tax regime itself, wherein we have done away with the deductions and exemptions. So we would encourage more taxpayers to come to the new regime, and I see that most of them would respond.
But is there any deadline in the mind to phase out the
No, there is no deadline. We are actually open, and it is a choice of the taxpayer, that would say.
Sanjay, so coming to you on, lot of rate, structure had been adjusted in clutch of items. We have seen a lot of exemptions being given. What were the thought process behind it? It's more of a, boosting domestic manufacturing. Is that the case?
Yeah, the basic thrust of budget, as far as customs is concerned, is fourfold. One is to promote domestic manufacturing and value addition. Secondly, to promote the exports. Thirdly, ease of doing business and to remove any kind of rate structure which was leading to dispute. Mm-hmm. So, and the fourth one was to provide relief to the common people. Mm-hmm. So with these objectives, this exercise has been conducted. Mm-hmm. And for to promote Make in India, on certain capital goods which are used for manufacturing of lithium-ion batteries, mm-hmm. for use in motor electric vehicles, mm-hmm. or mobile phones, on that full exemption has now been granted.
Correct.
Similarly, on certain parts and subparts of the PCBA or camera module, etc., which are used in manufacture of mobile phones, mm-hmm. have now been brought down from 2.5% to 0.
Correct.
Similarly, on case of this interactive flat panel displays, mm-hmm. Which are presently 100% imported. Mm-hmm. So on these, the duty inversion has been now corrected.
Yes.
And the open cell, which is used in manufacture of these IFPDs, mm-hmm. has now been brought down from 15% to 5%. Mm-hmm. Similarly, parts which are used in these open cells have been brought down to nil.
Correct.
So this is again towards promoting Made in India, mm-hmm. Make in India. Similarly, on certain power looms to manufacture the technical fabrics, mm-hmm. so on that the exemption has been provided. Mm-hmm. Mm-hmm. So these are towards to promote Make in India
ease of
and
business.
Ease of business. Towards ease of business, now the rate has been made same in case of Ethernet switches, mm-hmm. which are of carrier grade. Mm-hmm. And earlier there were two rates. For carrier grade it was 20% and mm-hmm. for non-carrier grade it was 10%. Mm-hmm. Now rate has been rationalized, mm-hmm. and brought down to 10%, so that there are no disputes, mm-hmm. on that front. Mm-hmm. Similarly, for exports also measures have been taken, which you might have already seen in the budget print.
Yes, sir.
And I would like to mention that towards that, on frozen fish paste, mm-hmm. The duty rate has been reduced from 30% to 5%, so that it can be used for manufacture of analog products, mm-hmm. And exported. Mm-hmm. Similarly, on handicrafts which are exported, 9 new items have been added, mm-hmm. and the time limit in which the export has to be made, mm-hmm. has been increased from 6 months to 1 year.
Clearly, the lot of duty correction, but in the projection, if you see, it's somewhere giving a conservative sort of projection. Am I right? The indirect taxation projection kept at 8% growth only for FY26, which includes, of course, CGST, excise and customs?
Yeah, the growth rate has been kept at 8.3%.
Okay, 8.3%.
The thing is that on GST, yes, the growth rate which has been taken is 11.3%. Mm-hmm. Whereas in case of customs, mm-hmm. and union excise duty, mm-hmm. I would like to mention on customs. Now the thrust is to provide some kind of protection to the industry. Mm-hmm. Revenue collection is not the prime objective. Mm-hmm. And India has entered into many FTAs. Mm-hmm. And in these FTAs, either rates are eliminated or reduced in a phased manner. Mm-hmm. And in addition to that, to promote Make in India, we are reducing the rate of customs duty applicable to many raw materials and components. Mm-hmm. Therefore, the growth in customs revenue is now flattened. Mm-hmm. And in case of union excise duty also, since it is only on 5 petroleum products, mm-hmm. and on tobacco, mm-hmm. so there is not much scope of the growth in union excise duties also. And this year, the windfall tax, mm-hmm. has now been withdrawn in the month of December. Mm-hmm. So the tax collection which happened on windfall tax to the tune of 6,500 crores will not happen in next year.
Yeah,
so by taking into consideration the growth which is very minimal or marginal in case of customs duties and excise duties, so the overall indirect tax revenue growth is pegged at 8.3%.
And the buoyancy is around 0.82%. Is that correct? It's also on the lower side, sir.
So if you see the buoyancy on as far as GST is concerned, it is more than 1.
Okay.
But
the custom and excise.
Customs and excise, because there is not that much growth.
Yeah.
So the overall buoyancy is less than 1.
Is less than 1. Sir, to you, a lot of rationalization seen in the TDS and TCS also, liberalized scheme also seen from 7 lakh to 10 lakh has been increased. So what is the thought process behind it, if you could elaborate that?
You see, it's all an integrated sort of a process. So when you do a slab change also, and when you say that, okay, 12 lakhs, less than 12 lakhs, no tax, ultimately TDS is a way of collection of tax. TDS has two components. One is to track the transaction. The other is to collect as you earn, to deduct as you earn. So therefore, once the tax liability goes down, the TDS rates also ought to be rationalized.
Correct.
So with that thought, TDS rates have been rationalized and the thresholds have also been rationalized. Therefore, there has been a long ask of the taxpayers that the TDS regime was a bit complicated and therefore that needed to be rationalized. There were multiple rates. So this year what we have done is we have rationalized rates as well as the thresholds.
Okay.
And this exercise we have done, we will be taking it in the new bill also.
Okay.
So that would make things easier for the taxpayer. One, it would leave more money at the hands of the taxpayers, because more TDS meant that the money would get blocked and then it would have to be given through refunds. Now this, since the TDS rates and thresholds have been rationalized, so therefore people would have more money at their disposal. So it will be a twofold sort of benefit for the taxpayer.
Clearly, also, sir, some clarity needed on the safe harbor and the transfer pricing. How this is going to benefit investors, the foreign investors particularly?
So safe harbor, that provides clarity. The basic principle of safe harbor is that you provide clarity to the taxpayer as regards the treatment of the transaction that is going to be taken by the tax department. So for example, in the case of electronic manufacturing facility, including semiconductors and manufacturing of electronic equipments or articles or things, the clarity has been given that for a non-resident company who is coming to India to provide services or technology, the deemed sort of profit income would be 25% of the receipt. So therefore, that has been actually, hard-coded in the Act itself. Okay. That brings clarity. So therefore, that leaves no scope for interpretation insofar as determining the income is concerned. So that promotes, more investment. Similarly, in the case of transfer pricing, what we have done is that this transfer pricing determining the arm's length price was otherwise till now it was an annual feature. So every year the arm's length price of a transaction used to be
creating a lot of disputes. It was creating a lot of disputes.
It would create disputes, that is one. The multiplicity of proceedings would also be there because every year you determine the arm's length price. So the change that we have brought about is that once this process is going on, naturally it takes time. So therefore, generally it involves about 3 years by the time a decision is taken. So why not leverage on those 3 years, 2 years also, and in one go determine the arm's length price for all the 3 years. So that way it cuts down on the proceedings as such and brings more clarity to the taxpayer. So this is how we are actually trying to promote and bring more.
As a part of dispute redressal, and it will also reflect in the new tax bill, you said, as like the TDS and TCS?
Yes, so all the changes, all the amendments that are being proposed here in this bill would be updated, and when the new tax bill will be presented to the Parliament, it will incorporate all these changes.
One clarity needed on the new tax regime, sir. Capital gains is not going to be added in the whatever the exemptions taxpayers are getting. If you could elaborate a bit on that.
You see, the capital gains is charged on a different tax rate. For example, long-term capital gains is 12.5%.
Yes, yes.
Now, suppose a person is having 12 lakhs of income as capital gains, let us say, right? What would be the tax component?
Yeah.
12.5% of 12 lakhs.
True.
So that is not the intention.
Yeah, yeah.
You see, the intention of the government is that the middle class, you see, who is earning income from normal sources of income, salary, even business, income from other sources, they should get the benefit. They should get the benefit of the slab. So the slab is 0 to 4, 0, 4 to 8, 5%, 8 to 12, 10%. Whereas capital gains is on a different footing altogether. So therefore, the way it would go is that whatever is the capital gains component in the total income, that will be taken out. Other than that, the net, other than the capital gains, it would be seen whether this adds up to 12 lakh or not.
Okay.
Then this would be actually a tax liability would be determined.
Okay.
Added to that would be the tax liability corresponding to capital
Okay.
gains.
Understood. Understood. Last question from you, sir. On the, of course, I know that GST is not the, it's outside the budget purview, but we've seen the January numbers. It's close to 1.97. It's second highest, I guess. How soon do you think that rate rationalization progress in GST regime, sir?
Yeah, it is difficult to say, but there is GOM, which is going into this and conducting this exercise. GOM is yet to present their report. And in that, they will look into all the aspects related to GST rates. And once that report is ready, will be presented in next GST Council meeting. And once the recommendations are received from the GST Council, the rates will be notified as per the rationalization which is suggested by the GOM.
But do you think that there will be a kind of changes in the existing slabs and the consensus will be reached?
It will be a comprehensive exercise. They will look into all the aspects, including the tax slabs in GST.
Okay. Thank you so much, sir. Thank you for taking out time for us.
Thank you.
Thank you.